Hey everyone, welcome to another episode of AdMail. This is Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of AdMail. Today is a Roth featured podcast. We're going to have 3 questions. Only Roth. Yeah, I'm going Roth. I'm going hardcore Roth. And what I'll do is I'll do a quick summary of the 3 questions and answers, and then dive into a little bit more detail. So the first question is, what's the tax rate if I do a Roth IRA conversion? The quick answer is whatever you convert is added to the other income you have, and that will determine your tax rate. Second question is, can I contribute to a Roth IRA if I have a 401k at work? The answer is yes. If you make less than $228,000 married filing jointly, or $153,000 single, you can. If not, you can do what's called a backdoor Roth IRA. And the third question is, can I combine a Roth IRA and a regular IRA and a self-directed IRA LLC? The answer is yeah, you can do it, and I'll explain how to do it in a minute. So first question is from Orrin T. of Scottsdale, Arizona. Orrin wants to know, what is the tax rate if I do a Roth IRA conversion? Okay, so it's a great question. I get this question a lot. Hey, I'm going to do a Roth IRA conversion of 50K. How much should I expect to pay tax? And the answer is, I don't know. Why? Because when you convert amounts, it's added to all the income you have. So let's say you make 100K as a lawyer, and you're going to convert another 50K. So now instead of paying tax on 100, you pay tax on 150. So it's easy. You just got to look at you got to go to the Google 2023 federal tax brackets, and you'll see. If you make between 89 and 190, you're going to pay 22% if you're married filed jointly. So if you made 100 as a lawyer and you're going to put 50 conversion, your tax rate's not going to change. Still 22%, which is good. So this is a really good strategy, because let's say you don't want to go above the 190 because your tax rate goes from 22 to 24. But let's say you make between 190 and 360. So let's say you make 320. Okay, you're doing really well, and you want to convert 100. So now your your taxable income goes to 420, which will now put you in the 32% tax bracket instead of the 24% tax bracket. So, those are the things you need to kind of consider, keep into mind when doing conversions. You kind of don't want to go into a higher tax bracket. You also could use losses, NOLs, net operating losses, to reduce your taxable income. So great question, Warren. Second question is from YouTube, and this person wants to know, can I contribute to a Roth IRA if I have a 401k at work? The answer is yeah. When you have a 401k at work, what the IRS is focused on is limiting your tax deductions in a pre-tax IRA, right? So the income thresholds are much lower if you want to put money into a pre-tax 401k. And then there's different rules and numbers based off if you have access to a 401k at work, or your spouse does if you're married filed jointly. But to focus on the Roth, if you make less than $228,000 married filed jointly, $153,000 single, yes, you can do a full Roth IRA even if you have access to a 401k at work. If you make more than those numbers, more than 228 married filed jointly, more than 153,000 single filer, you can do what's called a backdoor Roth IRA, where you simply make an after-tax IRA contribution, do not claim a tax deduction, and then immediately convert those funds to Roth, and you've just circumvented the income limitations for Roth contributions. So that would be your workaround if you made more than the 228 or the 153 single filer. So thank you for that question. Third and final question of the podcast. Yeah, we're moving quick. These are great questions. I love to hit them hard and move on. So everyone gets the answers, the data, the info they need, and you can go on to do better things with your day. But hopefully you get what you need from the podcast. And that's kind of the comments I got. Hey, give a summary up front of what the questions and answers are. Make sure this makes sense. If I only have 2 minutes, I can at least listen to them. And if I have some more time, I'll kind of go forward with that approach. Third question from Sammy T of Flushing, New York. Sammy wants to know, can I contribute my Roth IRA, my traditional IRA, to do a real estate deal in a self-directed IRA LLC? Yes, Sammy, you can. It's very, very common. So some people don't have enough money in one IRA, so they have to combine multiple IRAs to do investments like real estate, where even though there's a lack of inventory and real estate sales, I just read, are at 13-year low in the quarter we're in right now in 2023. This is going back to third quarter actually. Prices actually went up 2%. Why? Because there's no inventory. So that means people need to aggregate their retirement accounts to go out and buy real estate assets. So the way you do it, Sammy, you work with us. We're the best at it. We will set up your LLC. Generally in the state where you buy the real estate, we'll do the operating agreement, get you the tax ID number. Can even open a bank account for you at Capital One, so you don't have to stress about getting the bank account open. And what we'll do is then the operating agreement will show the IRA and the Roth as owners. And their ownership will be based off a pro rata formula. Essentially, it will mirror the amount each IRA contributed to the LLC. So if the traditional contributed 100 and the Roth 100, it would go 50-50. Okay. If it was 33,000 and 66,000, it would be 66-33. So we would take care of that for you. You would fund the LLC simultaneously based off the Swanson case. The entity only becomes disqualified after funding. But you don't really have an issue because you have no personal funds at all. So there's no issue in terms of disqualified person, since an IRA or a Roth IRA is not deemed a disqualified person under 4975E2. So pretty simple, pretty safe, no risks. You can be the manager, Sammy, and you can have the checkbook control. You could use a local bank or use our relationship with Capital One to get things done, and you could transact on behalf of the LLC. Title in the real estate will be in the name of the LLC, not the name of the IRA. So you'll get some limited liability protection. You will get some privacy, and you'll have more control over the process. So that's it. Another AdMail in the bag. Thanks to everyone who participated. If you have questions, ideas, comments, and you're shy, don't worry. I won't publicize. We all can learn from each other. It's just a great venue. I love doing this stuff. This is kind of a Roth edition. I'll probably try to, I've got some comments that people are like, hey, can you keep the questions kind of connected? In some cases, it's more enjoyable. Or this way, if I'm focused on Roth and you're going to be talking about inherited IRAs, I can tune out. I'll do it sometimes. I like to keep people guessing. It's more fun. This way, you may not know you're interested in something, and then I'll do a question on it, and it may trigger something that is relevant to your retirement situation. So is the reason I do it this way, but I get it. Sometimes you kind of want to know what's in front of you, and that's why I'm now doing quick summaries of the questions and answers in the beginning of the pod. So have an amazing day. Thanks again for hanging today. Appreciate it. It's a weekly podcast, and don't miss it next week. If you subscribe to our amazing YouTube IRA Financial channel, you can watch this anytime you want. You can also pick up previous episodes wherever you listen to your podcast. So thanks again. Have a great day, and take care.